So Uber stock, for good reason, is taking a huge spike today, up 7 plus percentage points. So as you can see, they are currently up 7.71%. Obviously, that'll vary a little bit throughout the day, but it looks like they're going to stay somewhere around that number. And the reason they have such a big spike today is some news came out about it. So Waymo is launching their robo-taxi service in Atlanta with Uber partnership. So again, you may have seen me cover a little bit about Uber recently, maybe when I even hinted a little bit about Waymo when I was talking about Google. But Waymo seems to be in the lead for robo-taxi services, and it's going to change the whole game. Again, I've talked about in other videos, you want to be able to invest, not financial advice, but I want to be able to invest in whoever is going to win the robo-taxi race. You have mainly Waymo and Tesla trying to do this. I've heard Amazon seems to be trying to get into that, but I don't know if anybody's really taking them seriously as a front runner anytime soon. It seems like by all accounts Waymo is still in the lead. Waymo is owned by Google, and I was concerned about Uber because I thought Waymo could pass up Uber and make Uber obsolete, but instead of that happening, Uber abandoned their idea of basically creating their own self-driving cars and just decided to partner with Waymo instead. So basically, to summarize it, the Motley Fool gave a few key points about what's going on here. Waymo's autonomous vehicles can now be booked through Uber's app in Atlanta. It's the second city the two companies have launched a partnership in. Uber has previously said it sees a big opportunity in partnering with autonomous driving companies. The partnership comes in the same week that Tesla actually launched its robo-taxi service in Austin, Texas, an event the market also met with enthusiasm. So Tesla is up right now as well, but they are also in Austin already. So they've been in Austin. There are now more than 100 Waymo vehicles exclusively available through Uber. Waymo trips in Austin have an average rating of 4.9 stars, according to Uber. They also do not have any sort of additional cost when you do a Waymo self-driving car through Uber. So if you're worried about, like, if people were worried about, well, is it going to cost me more to basically be someone who's testing this out? It doesn't. It's probably about the same price as Uber. It may even be cheaper because you don't have to tip. Now, you may be wondering about Tesla. Well, Tesla has actually reportedly run into some problems. Even though Tesla's stock is up after this announcement that they are also now having robo-taxi services in Austin, recent reports have said that they've had some concerning incidents which raise questions about the safety and reliability of Tesla's technology. So they've apparently violated some traffic laws. They've done some speeding, failing to stop for certain obstacles, and has a little bit of erratic behavior. So I haven't seen as much stuff about this with Waymo. Again, Waymo so far has 4.9 out of 5 stars on their Uber reviews. But it is a little concerning for Tesla, even though it hasn't necessarily affected their stock negatively yet. Because right now it's mainly a two-company race for US-based robo-taxis. So let's look more into Uber stock. If you missed my last video about Uber stock, we're going to go a little bit into some pros and cons of how things are looking with them, a bunch of different indicators that might help you make a decision whether or not Uber is a good buy. Just to disclose up front, I actually bought Uber a while back, earlier this year. I'm obviously very happy with this news, and I do actually believe in Uber, but obviously I bought at a different time. So that doesn't mean I'm saying this is a good time to buy, and obviously I'm not giving you financial advice. You need to do your own research. But some things to keep in mind here, the PE ratio is quite low. 16.01 is pretty good. That's quite low. I mean, you can compare that to growth. Many people will argue about whether you should compare it to growth or whether you should just look at PE ratio and compare it like to, is it above or below 20 or 25? It depends on who you ask. But either way, regardless, their growth is really good. The last year, they are up almost 30%, and the last year has been kind of rough for a lot of companies. Over the past 5 years, up 209%. Now, obviously, past performance does not mean it will continue, but if you look at the growth that you've been getting, even if you just look at the past year or even year to date at up almost 45%, compared to the PE ratio, that's very good. And even if you just look at the PE ratio as a standalone number, it's still below 20, which is really a good indicator by many accounts. They don't have a dividend yield, so you are obviously buying into Uber stock specifically for growth if that's your goal. Quarterly financials here, let's look at that. Year to year, so they're up 13.84% in revenue, net income up 371 plus percent, diluted EPS up 359%, net profit margin is up almost 339%. Now, earnings calls, their last earnings call for the first quarter of 2025, they did beat by 52%. Now, revenue was a slight miss at minus 0.74%. Now, also, if you want to compare Uber's returns versus the S&P 500, that can be useful as well, just to see how it's doing compared to the rest of the market of the top companies. So looking at the S&P 500, it's a good indicator of kind of how the general market is doing for top companies. And year to date, it's only up 4%. Past year, up 11.9%. Past 5 years, up 102%. So Uber is pretty easily beating the S&P 500 over the last few years. But again, that doesn't mean it'll always continue. That doesn't mean past performance will equal future returns. Some other indicators I like to look at here, we have a few different areas of Robinhood that are definitely interesting. You can see what customers are doing with their buy and sell volume of a stock. I don't necessarily care about this as much as I do the hedge funds and insiders, but as far as what customers are doing, this is day by day. I'm not really sure why they do this day by day specifically for customers while they do different periods for hedge funds and insiders. But day by day, we do have some people selling. Now, this was actually yesterday. That was before it took a big spike today. So those people might be regretting that. The people that sold yesterday, that was about 14%. Hedge funds are actually up quite a bit after the Q1 results. Even though they had a slight miss on revenue, hedge funds seem to be pretty bullish at a 77% buy score out of the first quarter. I wouldn't think that would be much worse for the second quarter based on results. Now you can also see what insiders are doing. So you do have insiders apparently buying at 100% right now. You don't know how many insiders that is. I don't know if that's just one insider based on this, but so far at June 2025, we've only had buying from insiders. Then you can also look at the analyst ratings. Analyst ratings right now have an 81.8% buy score out of 55 analysts, and 18.2% give them a hold score, while 0% of these 55 analysts actually give Uber a sell score. Another indicator you might look at, which is the price to earnings ratio versus their growth rate. If you look at their PEG ratio, according to NASDAQ.com, they actually have a forecast 12-month forward PEG ratio of 1.08 for Uber. So to put that in perspective, that's actually a pretty fair value according to that. Now, obviously, you don't want to make all your decisions based on one score of any kind, but that's just one indicator that it's at least around a fair value for this stock. It may not be super under or overvalued right now. Now, another thing I like to look at is how is the company run? Now, many people might have different opinions on how to figure that out, if they believe in the CEO or not. Some people might have to actually talk to the CEO before they believe it is or is not a well-run company. But if you look at reviews from people who have actually worked for Uber, they have a 3.8 out of 5-star rating, which is pretty good. Anything close to 4 or higher is good. And 69% would recommend working here to a friend. That's almost 3/4 of their employees. And then about 3/4 of their employees actually approve of the CEO's job that he's done. So those are pretty good scores as far as whether or not you feel like they may be a well-run organization. If you saw me discuss like Tesla, for instance, which is one of their main competitors, their scores are a lot more controversial. Now, overall, 3.5 out of 5 stars is not that bad, but only about half of people who work at Tesla recommend working here to a friend, and only about half of people actually approve of Elon Musk as the CEO. So again, I've already kind of made my move on Uber earlier this year. I'm pretty happy with it so far, especially after today, but obviously I invest for the long term. So this is not financial advice. I'm not telling you whether you should buy or sell or hold right now. I'm obviously going to at least hold my stock, but based on what I've shown you, I can kind of make a good case for why it could be a buy. You might want to wait a few days if you're contemplating that, just because of such a big spike today. There's a good chance there may be a little bit of a correction or a little bit of a sell-off after something like that. But as far as where they are going, ride sharing is still a very popular concept. I think it's only going to get more popular. I think it could do away with people having personal vehicles at some point. Now, how far down the road that is, we don't know. But I also think their partnership with Waymo, they're only in 2 major cities right now. That's only going to grow. And it really it's going to come down to, as this goes on, we may have a few years before we have to worry about this, but is there going to be a point eventually where Google, who owns Waymo, says, okay, well, Waymo is just going to have their own separate app and we're going to cut out the middleman, which currently is Uber. Then that would be a little scary for Uber, but right now they are basically using Uber's already established user base to get more people to use Waymo, and it seems like a good partnership, at least for the short term.